Hello and welcome back to the course. In this video, we'll talk about one of the most basic components of technical analysis, and that is the idea of support and resistance. Support and resistance simply refer to two phenomenons we see in the marketplace time and time again. Support being a place where the market supports a particular asset, and in this case, it's the euro versus the Australian dollar, but it really doesn't matter. It works the same in all markets. And what that means is there are buyers there that prevent the market from falling below a specific area, and therefore price is supported. Alternately, there is something called resistance, and it's where the sellers come in and keep prices underneath a particular area. And the exact same thing, just in the opposite direction. Sometimes you will hear them referred to as supply and demand, as demand being the place where the buyers come in, and supply being the place where the sellers offer, therefore the buyers can't overcome. So simply put, when you look at a chart, it's pretty straightforward. You can draw lines in places where the market doesn't seem to be able to go. So for example, on this chart here, I would feel fairly comfortable in suggesting that somewhere in this area here you have support. Now, one of the things about financial markets that you'll find is over time you'll recognize that large round numbers play a significant factor, as it were, in the way people trade. So one of the things that quite frankly you will see is near the handles, in other words 1.45, 1.50, 1.48, etc., that's where you tend to see a lot of action. Basically, it's every 100 cents or 100 ticks depending on the market you're trading. So when I pull up this line that goes across, this horizontal line goes across the chart and suggests there is support there, you'll see that 1.4116 is where I drew it originally. I will go ahead and make that 1.41. Click OK, and you can see that at least during the time period that's shown on the chart, the buyers come in and support this market in this area. That's very important to know because that means the odds of the market bouncing from there, finding support, is fairly strong. Alternately, I can make an argument for some resistance that has recently been broken, and you'll notice that this is at the 1.45 level. That's an area where the sellers have come in, where supply has been, where resistance has shown up, and now we've broken above it, so we continue to see bullish pressure, and it looks like the buyers are starting to take control again. Now, during this entire time frame, and this was the 4-hour chart, you can see there were plenty of trades that suggested going back and forth where you could buy or sell. This is very common in the marketplace, and some stats actually suggest that markets tend to consolidate or trade in a range like this 80% of the time. So it's very important to know where support and resistance is, because quite frankly, you would have not want to have been one of the traders up here buying on this candlestick, where you can see it would have turned around on you immediately and you would have been 400 pips in the hole before you knew it. So when you see resistance in this area, odds are that it is going to sell off. Now, ultimately, there's no 100% way to know either way, but it does at least increase the odds in your favor. A lot of trading isn't necessarily looking at a particular indicator or a particular signal, but it's knowing where to look for them. And support resistance is without a doubt one of the most important places to look on a chart for trades. Now, a few things that you may want to keep in mind is there are some basic quick and dirty rules that you can follow. Support should be touched at least 3 times. Resistance should be touched at least 3 times. If it's only been touched once, it's not necessarily a support or resistance area. Typically, they tend to happen at the round numbers, as I said previously. And just because we go a few pips in this case above the 1.45 level, it doesn't necessarily mean the resistance is broken. Typically, traders like to see a close above there on an hourly, 4-hour, daily. Just depends on the time frame you're trading. But you have to recognize that just because you hit 1.4501 at that point doesn't mean that the resistance is broken. It just means it's being challenged. Now, the longer we stay above there, as we have done for several 4-hour candles on the chart now, the more convincing it is that we have broken out. Another thing that's interesting is quite often market memory comes into play, so areas that were previously resistive now tend to be supportive, and you can see that has been the case so far. There are several facets to support and resistance that I can get into and will in future videos, but this is the basic definition of what we're looking for.